We appreciate your presence at the conference today. We will now begin this media briefing. To do the honors, I invite Chairman Sri Dinesh Khara to address the media on the bank's financial performance for the quarter 3, the financial year 23-24. Sir.
Thank you very much. Good afternoon, everybody. Thank you for joining this press meet, even on a Saturday afternoon. I would like to start by thanking the support of all our stakeholders, including our customers, shareholders, employees, and the broader ecosystem, without whom none of our successes could have been possible. Fairness to all our stakeholders remains at the crux of the bank's culture, which in turn has helped us in creating sustainable value. Let me start with a brief description of the present global and domestic economic scenario. Global economy is projected to grow by 3.1% in 24 and 3.2% in 2025, owing to greater than expected resilience in the US and several other emerging economies. While global economy is showing resilience, the projected growth is still below the historical level of between 2000 to 2019, which is average at around 3.8%. While the likelihood of a hard landing has receded significantly, still there are certain risks that needs to be monitored. New commodity price spikes from the geographical shocks, supply disruptions, and the persistent underlying inflation could prolong the tight monetary conditions. Against this backdrop, the outlook for the domestic activity is brightening on account of the sustained buoyancy in services, consumer and business optimism, public spending on infrastructure, and underlying strength of the financial sector's balance sheet. Consumer confidence has improved with uptick in most of the macroeconomic conditions. Yet, the Union government has built an infrastructure at a historically unprecedented pace, and it has taken the overall public sector capital investment from about 5.6 trillion in financial year 2015 to almost 18 trillion, which is now projected for the year financial year 25 as per the budget estimates, which is almost a jump of 3.3 times. Gross tax to GDP ratio in financial year 25 is projected to touch 11.7%, the highest in 16 years. GST monthly threshold has moved up to 1.64 trillion. CPI inflation is expected to moderate in coming months. On the external front, the current account deficit is modest, with foreign exchange reserves providing a strong buffer. IMF has recently updated India's GDP growth outlook for the year 2024 to 6.7% from 6.3% earlier, underpinning the growth potential of the Indian economy. While recognizing global risk and the volatility in the financial markets that they may entail, the real GDP is expected to grow at 7.3% in financial year 24. Interim budget has estimated nominal GDP growth of 10.5% in the financial year 25. On the banking front, deposit growth has rebounded, but sustained credit growth momentum has increased the wedge between deposit and credit growth. As on 12th of January, all scheduled commercial bank credit grew by 20.3% as against 16% last year, and deposit by 13.1% as against 10.6% last year. Latest credit growth numbers reveal a sustained pickup across agriculture, MSME, and services. Now I come to the bank's performance. Coming to the bank's performance, once again we have delivered the stellar numbers. Our net profit in 9 months of the financial year 24 stands at 40,378 crore, which has seen an increase of 20.40% over the 9 months of financial year 23. This is despite the fact that we have provided for the wage revision of 12,718 crore during the current financial year, as per the bipartite settlement, wage settlement at 17% wage hike. Further, I am happy to share that our net profit for quarter 3 of the financial year 24, which stands at 9,164 crore, is after absorbing the additional liability to the tune of 7,100 crore on account of the anomaly of the pension which used to persist ever since 2002 onwards. There was a set of employees in the bank who were entitled for a pension of 40%, and there were a set of employees who were entitled for a pension of 50%. There was the matter was pending before the court of law, and now there is a settlement almost in offing. We have got the approvals from the GOI as well as from the RBI, but we are still awaiting the formal notification. But nevertheless, since we were in a position to have a very clear visibility of this liability, we have provided for this additional provision of 5,400 crore on account of this increase in pension for all the employees. And secondly, there was another obligation on account of the dearness relief neutralization for the pre-2002 retirees, and this obligation was to the tune of 1,700. It's a one-time obligation which was required to be provided for, and I'm happy that we could provide for all this, and despite that we are in a position to generate the Q3 profit numbers of 9,164 crores. In fact, if you really look at it, we have accelerated our provision for the wage revision, and also we have provided for this one-time obligation also, and our net result is post accounting for all these one-time items. The return on asset of the bank is at 0.94% for 9 months of financial year 24, and it has improved by 7 basis points over 9 months of financial year 23. The ROE for 9 months of 24 stands at 19.47%, and it has improved by 88 basis points over 9 months of 23 last year. We have been consistently delivering ROE in excess of 15% since last 6 quarters. Our aspiration from our current position of strength is to sustainably deliver a ROE of more than 15% through business cycles. The cost to income ratio of the bank stands at 57.35%, but that is after including the impact of wage revision provisions and excluding the impact of one-time exceptional item of pension liabilities and dearness relief neutralization. Overheads have been under control and have shown a decline of 3.10% sequentially. We are mindful of our liability portfolio as it provides a stable stream of resources for us. We continuously monitor the concentration of our deposit profile daily, ensuring that dependency on the wholesale funding is contained within the prescribed levels. The differential rate of deposit and CDs are just around 13% of the total deposit. We retain reasonable reserve resources in the form of liquid assets over and above the CRR SLR requirement to meet the future contingent demands and broad-basing the deposit mix. Unencumbered excess SLR was about 4 trillion as on 31st of December 23, and the liquidity coverage ratio stands at 131% as on 31st of December 23. That is much above the regulatory benchmark. I'm happy to highlight that the credit growth has been robust across all the segments. Our retail personal book now stands at 13 trillion and is growing at 15% YOY with an industry-leading asset quality. The growth in agri, SME and corporate segment has been healthy at 18%, 19% and 11% respectively. I'm glad to share the progress we are making in digital banking. 59% of our savings bank accounts were opened through YONO in the 9 months of this financial year 24. We are also leveraging analytics with significant business of rupees 95,000 crore being sourced through analytical leads, showing a growth of almost 37% on a YOY basis. With regard to asset quality, our gross NPA ratio has improved by 72 basis points YOY and now stands at 2.42% as at December 23 and continues to be at its lowest level in more than 10 years. Our net NPA ratio has also improved by 13 basis points and stands at 0.64%. Slippage ratio for 9 months of financial year 24 has improved by 5 basis points YOY and now stands at 0.67%. The consistently improving asset quality is also reflected in our credit cost, which now stands at 0.25% and has improved 12 basis points on a YOY basis. We have well provided for our loan book with PCR, including OCA, standing at 91.49%, and PCR for quarter 3 of financial year 24 without OCA stands at 74.17%. While we are glad about the outcomes in the current quarter, we are also conscious of the areas for further improvement. On the liability side, we continue to focus on increasing our share in the current account while maintaining our leadership position in savings deposits. Our CET1 ratio, after considering the plowback of profit for the 9 months of 24, is at 10.38%. Additionally, the current ROE profile of the bank is above the credit growth trends, which will lead to CET1 incremental accretion. However, the bank is open to raising equity capital if the growth trends so warrants. Our subsidiaries are also consistently performing well and continue to create significant value for all the stakeholders and most importantly for our customers. Concluding my opening remarks, I want to thank all of you for your support to the bank. The bank, while pursuing its own progress, contributes to the progress of the economy and also for the broader ecosystem. We remain committed to reward your trust in us with superior sustainable returns over the long term. My team and I are now open for the questions from all of you. Thank you.
Thank you very much, sir. Now we'll move to the question and answer session with the media. To ensure seamless flow of the session, we will move from this end to that end, allowing everyone an equal chance to ask a question. We request you to please follow the format and restrict yourself to 2 questions at a time, focused on the bank results. If time permits, we may repeat the circuit for additional questions. I now request Mr. Ben from PTI to please start.
Yeah.
What is your outlook on cryptos and on the liquidity?
So as far as the slippages are concerned, we have seen on a YOY basis there is a reduction in the slippages, and of course for the quarter it might look to be little on the higher side, but out of that also we have pulled back almost about 900 crores. There is one particular SME account which is having a challenge in terms of its financial weakness, so we will be looking at it in terms of the restructuring. So that is the only major item. As far as the slippages in the retail, SME and agri are concerned, agri normally there is a phenomena which is more seasonal in nature. We always see that in the month of November, December, but we are quite hopeful that we should be in a position to pull back those slippages also. I think as far as slippages are concerned, that should not be a matter of concern. On a YOY basis, we have actually seen the reduction in slippages. As far as the outlook on the credit is concerned, what we are observing is that the credit growth has been very broad-based. We have seen about 19% growth in our SME book, 18% growth in our agri book, and almost about 15-16% growth in retail, and 11% growth in our 10.67 or around 11% growth in the corporate book, and also we have seen a decent growth, almost 13% in our international book. So we are seeing a very healthy trend as far as the credit growth is concerned, and we are quite hopeful that it should continue going forward as well.
Thank you, Ben. We'll take the next question from Mansa from NDTV Topic.
Hi, sir. So my first question is that have you liquidated any of your SLR holdings in this quarter to boost the credit growth?
No, nothing like that. Our liquidity coverage ratio is even 131% even now. So we do enter into some kind of a trade on an ongoing basis, but if at all on a net basis, we would have bought some more than 20,000 crore worth of securities, yeah, in this quarter. So that's not a challenge. And also our credit deposit ratio for the month of December was 66%. So we don't have any challenge. We are quite liquid to support the growth of the economy, let me assure you. Yeah.
So what is the mix of EBLR and MCLR loans in the loan book?
We would have almost about 64% of our loan book is in terms of MCLR and EBLR, and the breakup is in terms of MCLR it is about 38%, 37.6%, and EBLR is 27%.
So MCLR is higher.
Yeah.
Why did the bank not decide to increase the lending growth because the NII growth is not too high this
MCLR is something which is a formula driven. So when when it is actually a derivative of the formula. So whatever that prescribes, we have gone for that.
Thank you, Mimansa. The next question is from Ram Kumar from the Hindu Business Line.
Just want to understand, is there something that is, weighing your non-interest income growth actually? It's almost flat actually.
See, this is also attributed to the kind of market situation. We have various components in the non-interest income, and when it comes to government commission, yes, of course, it is almost flat, and it is rather on a downward trajectory, marginally. But when it comes to our foreign exchange income, we are on the upside, and also we are also having a situation where in this particular quarter, which has just gone by, this was a festival season, and in the festival season, normally to attract the best quality business, we have got a situation where we give some kind of a concession on the loan processing, particularly in the retail sector. So that is the reason. But there is nothing structural as such. Structurally, I think we are moving in the right direction. And when it comes to our cross-sell, even that is also going well. And we don't envisage any major challenge eventually. And also, there is always some kind of a phenomena. There are some, in one quarter there will be locker rent which will come in. In the subsequent quarter it will not be there. Likewise, in the last quarter there are various fees which are being collected. So each quarter actually differs. So the better way is to look at the non-interest income is to compare on a YOY basis so that the trends are all captured.
And you mentioned about the capital raising, maybe look at capital. Can you give us some color on how much you are looking?
See, as of now, I will share with you, our loan growth is somewhere around 14-15%. But when we look at our ROE, which is at about 19-20%, so actually on a net basis, it is capital accretive. So long as we have this kind of position, we don't envisage any challenge. But if at all, suppose the loan growth goes beyond what our ROE growth is, then perhaps we'll have to look at it. But nevertheless, we are quite open in terms of this idea. If at all required, we will look at it. And as of now also, if we really reckon the plowback of the profit which we have earned for the 9 months, our capital adequacy ratio stands at about 14.32%, and our CET1 would be 10 point, how much? 10 point? 10.38. So that is, we are comfortably placed. But yes, of course, as I've said in the past, capital is not going to be a constraint for the growth, and we have already seen that if at all we reckon the plowback of the profit, we can support the 7 trillion worth of loan book growth.
Thank you, Ram. The next question is from Richard Pavlos of Informers.
Thank you, sir. Sir, can you give us some color on what is the loan pipeline now and what is the capex you are seeing in these sectors specifically?
I would say that we have seen much better utilization when it comes to the corporate loan book utilization, as well as also the disbursement of the term loan, undisbursed portion has come down. And now actually the way it stands today, we have got a situation where we will have, as far as the pipeline is concerned, it will be somewhere around 4.6 trillion. And out of this 4.6 trillion, it is actually split into the public sector and private sector. Private sector is on the higher side. That is the broad complexion. I would say 75% would be in the private sector and 25% would be in the public sector.
You planning any infra bond? You already done 20,000 crore in first 9 months.
Yeah, we are quite open to this idea, and I think we have now created a book which is perhaps the highest as far as the infrastructure bond is concerned, and we will be looking for the opportunities, and as and when required, we will certainly build up this book also.
Just to clarify, SLR holding excess is 4 trillion.
Yeah, as on 31st of December, it is 4 trillion.
Thank you, Richard. The next question is from Ekta Surya of C.
Good afternoon, sir. So we're seeing a one-time exceptional item of 7,100 crore. If you could shed a bit light on the same.
Yeah, as I mentioned, this is on account of some kind of a anomaly was there in the pension payment to the retirees of the bank. Some people were being paid pension at the rate of 40%, others were being paid pension at the rate of 50%. So there was a court case going on from the year 2002 onwards. Now there is a visibility in terms of we have got some kind of a resolution of this particular outstanding issue, and we have got the approval from Reserve Bank of India also for increasing this pension to 50% for all the retirees, and this liability is essentially on account of that. That is 5,400 crore is on account of addressing this anomaly. Though as of now, the Gazette notification has not yet come, and we are required to pay only after the Gazette notification. But nevertheless, since we could see this kind of a liability coming to us, we have already provided for it. 5,400 crore is on account of this pension. The other 1,700 crore is on account of the DA relief for the retirees before 2002. This was something which got resolved. So 1,700 crore is on account of that.
Most of them are one time.
So, if you could just give me a number for fresh slippages.
Fresh slippages, I think it is 4,900 crore. How much 4,900?
4,960.
4,960, out of which 900 crore we have already pulled back.
Thank you.
The next question is from Advait Paliti from Bloomberg.
So, just following up with the budget, a lot of commentary has been that this isn't be a good year for the bond markets. There might be bond inclusion that will happen. What is your outlook on corporate credit come from the bond markets? How you think that will perform? And your yield on investment seem to flatten. So, how do you look at it?
I think we have gone up, yield on investment has gone up by about 55 basis points.
Yes.
And also when it comes to the corporate book which I mentioned, last quarter we had grown in the corporate book only to the extent of about 7%. This quarter we have seen almost about 11% growth in the corporate loan book. So to that extent it's very positive. And when we look at the budget has also given some kind of a reassurance for the continuation of the infrastructure spend, which will certainly open up the opportunities for the corporate borrowing also. And apart from many other things, the newer initiatives which are there in terms of solarization, in terms of renewable power, etc. These are the new growth levers, and we have already started seeing some kind of visibility of such loan proposals also. So I think, to my mind, there is a decent opportunity which will be available. And what you talked about the bond market and also inclusion of the government paper in the bond market, I'm sure it will actually bring in many more issues from the corporate side, and perhaps the kind of space which will get vacated by inclusion of the government paper in the bond market, that will get filled in by the corporate papers also. And also the other piece which perhaps need to be also highlighted is that the new investment norms which are going to kick in from 1st of April 24, where we will not have the HTM ceilings in place. So that is a point of time when perhaps even banks can also invest into these corporate bonds. So I think there is a very positive traction which we are expecting as far as the corporate bond market is concerned.
So in terms of the corporate book, there's a 19% YOY increase for telecom sector. Can you just give us?
No, yeah, I will give you some color. This is, I think, partly to Geo. Just one sec. Let me just see.
Mostly Geo.
I think it is partly, and also to the tower company. I will just get you the details. Huh. No. So Summit is again the tower company. So again, this is all into the AAA companies.
Thank you. The next question is from Ritu Singh of CNBC TV.
Hi, sir. Just want to go back to the question of raising equity at the current growth rate of 3%, and you said there's still that gap between ROE growth of 19-20%. At the pace that you're growing, where do you expect to end the year, and when do you think you'll get to the place where you need to raise that capital? I mean, at the current growth rate.
We may not get to the place where we'll have to raise the capital, because if at all we continue to grow at 19% and loan book is growing at 15%, incrementally 4% I'm only flowing back. Incremental clawback is happening, so that is only supporting my ability to lend more.
Okay, so also the target portfolio in terms of credit growth, and your domestic Kasa has actually come down by about 25%.
I think this has been a phenomena across the industry.
Yeah, so we wanted to get a comment on what you're seeing out there in the market, what you anticipate anticipate in terms of challenges in growing this low cost?
No, see, the point is that when it comes to Kasa, invariably in the increasing interest rate, there's a tendency of all the customers to really try and earn as much as interest as possible. So that is why many of the customers, they move from the pure savings bank to multi-option deposit, where the money moves from the savings to the term deposit automatically beyond the threshold. So that is one reality which we have to face. The other piece is there is a very clear effort on the part of the bank to really reach out to the wealthier segments of the society to shore up the savings account. But the fact remains that the alternate options which are available in the stock market, securities market, so these are the other attraction which happens, and I mean, people are trying to improve the yield on their portfolio, and that is something which we have seen. The only plus is that, as was mentioned, that we have opened significantly large number of savings accounts, and also when it comes to the dip in Kasa, for us it is much lower as compared to our competitors. So I think that is something which is about the savings account. Now the other piece is about the current account. On the current account piece, we have actually grown. We have grown, and also there was a shift in the market dynamics as far as the current account is concerned. The current account broadly comes from either from the government entities, or it comes from maybe the trade, commerce industry, etc. So almost about more than 6 months back, we shifted our focus to the trade, commerce industry, and there we are seeing decent growth coming in. And also when it comes to government, they are now resorting to just-in-time funding, so which means that the float available for the current account as it is has shrunk for the market as a whole. So, but we are not vulnerable because we have already diversified our options in terms of raising current account, and we are seeing decent growth in the current account.
So if I may add a question, given what's going around in the market, if you see news around Paytm, we wanted to understand if you had any kind of relationships with them in terms of partnering or loans, because they source loans from other entities.
We don't have any such partnership.
And, the founder claims that a number of large banks in the last couple of days have reached out to Paytm to extend support because they'll be looking at other banking relationships. I was wondering if SBI has had any conversations and,
Nothing of that sort.
So there's no relationship whatsoever with Paytm?
No, not as such. They are maintaining some account with us, that's all.
Thank you,
Which is more of a settlement account.
The next question is from Anurag Shah of ET Now Swadesh.
सर रिटेल पर्सनल की बात करें हम तो उसमें अगर होम लोन हटा दें तो जो ग्रोथ है वो 16% से ज़्यादा की निकली, तो क्या आप इससे संतुष्ट हैं या इससे और ज़्यादा बढ़ाना चाहेंगे?
देखिए, ऐसा है कि ग्रोथ के परसेंटेज के साथ साथ वी आर इंटरेस्टेड इन द क्वालिटी ग्रोथ, एंड विद दैट क्वालिटी ग्रोथ इन फोकस, आई थिंक we normally look at it on the kind of opportunities which are available. So we will not let the good opportunities go past, and I think at the current rate we are generally happy and satisfied with the kind of growth which we are seeing in the retail personal. But if at all there are decent opportunities, we will not let them go past. 17 point. No, but yeah.
सर बैंकिंग सेक्टर में जब भी संकट आता है तो एसबीआई बड़े भाई की भूमिका निभाता है. हमने देखा है कि यस बैंक में जिस तरह से आपने भूमिका निभाई पूरे सेक्टर को बचाने के लिए. अब एक और संकट आया पेमेंट बैंक से जुड़ा हुआ, वहाँ जहाँ पर हमने देखे करीब 3 करोड़ से ज्यादा जो मर्चेंट है डिस्ट्रक्शन हो सकता है. तो क्या इस बार भी एसबीआई बड़े भाई की भूमिका निभाएगा किसी तरह, एटलीस्ट फॉर द बैंकिंग सेक्टर को बचाने के लिए? क्योंकि बहुत बड़ा डिस्ट्रक्शन आएगा और कंपनी के मैनेजमेंट ने भी कहा है कि हम बड़े बैंक से उम्मीद रख रहे हैं और उन्होंने.
We are reaching out to all the merchants, and we would be happy to welcome them back into the State Bank's fold if they so desire. We have got a company which is known as SBI Payments, and SBI Payment is the one which is offering POS machines and the QR code. They were already in market, and all this while now we are also reaching out to merchants so that they shouldn't experience any disruption.
ये सर शॉर्ट टर्म के लिए होगा और लॉन्ग टर्म के लिए भी कुछ?
On an ongoing basis.
Thank you, Anurag. The next question is from Ankur from ET Now.
Sir, I want to understand the provisioning part. Last time also wage provisions happened. It was on 15%, if I remember the number correctly.
14%.
14%, and actual settlement has happened at 17%. So is there any provisioning which is remaining on that part?
I will share with you. I will give a very clear picture on this. Up to September 23, we had made the provision at the rate of 14%, aggregating to 8,895 crores. In the month of December 23, we have made additional provision of 6,313 crore, because what was happening, we initially when we started making provision in the month of November 22, we started at 10%, and subsequently we increased at 14%. So whatever was the shortfall, that we have provided for in the month of December, aggregating to 6,313 crore. So up to December, now we have made provision for at the rate of 17%. Now the additional provision which is required to be made on account of 17% wage revision, and we hope that maybe somewhere towards March there would be some disbursements on account of this increase. So that's why we are only reckoning till the Q4. We are required to make a provision of 5,409 crore. That's all. So if you really look at it in the next quarter, as against what we have provided this quarter, 6,313 crore plus 7,100 crore, 13,400 crore which we have provided additional this quarter. As against that, in the next quarter it is going to be only 5,000 crore. So which means that we are not required, will be required to provide 9,000 crore lesser in the next quarter on account of this particular aspect.
And nothing sort of remaining for pension, because
Nothing. It is all done. It is all done. It's all done.
Also wanted to get a picture of the margins once again. Quarter and quarter, there is a decline not only for your banks, other banks also.
I think we have ensured. I think we have tried to keep the margins more or less in line with what it was as on the last quarter. We are at about 3.28.
1 basis point decline.
3.28% for the bank as a whole, but domestic level we are at 3.4, 3.43 or something.
3.41.
3.41. So that is the level which is there, and we are seeing an improvement in our margins in the international book also. So I think our effort is to address the NIM, and I would say that our deposit costs went up by about 10 basis points, but as against that, we are in a position to compress the reduction in NIM, and we are just about marginally we are off the mark from the last quarter. So I think the way I look at it is that this kind of an increase in the deposit cost is not going to be there going forward, and perhaps we'll be in a position to maintain the NIM at this level, or if at all there is a movement, maximum another 2 to 3 basis points. I mentioned that last time also, it will be within 3 basis points, and I expect that we should be in a position to operate within 3 basis points even going forward also.
Thank you, Uncle. The next question is from Chayan Ghosh of me.
So what kind of inflows have you seen in green deposits? That's the first question. And the second thing is, because of the data which your term deposits are growing, the Kasa ratio has shrunk over the last few quarters. So what would be the Kasa ratio that you would be comfortable with, and if you could give us some answer?
No, if at all you will ask me what will be by comfort level, I would not like the Kasa to drop at all. But is that a reality? Perhaps no. Because as I mentioned that while in the increasing interest rate scenario, invariably people prefer to move the money to the high yielding assets. So that is something which we will have to live with. So I think hopefully we will try to ensure that we should have Kasa of somewhere 41-42%.
Which is the pre-COVID level.
Which is actually the pre-COVID level. Pre-COVID level Kasa used to be around 40%. So we are actually better than the pre-COVID. During the COVID only the Kasa went up. So that is what but we are having strategies in place, and we should be in a position to be around this level. Green deposit, I'll have to get that. Yeah, please.
See, we came out with a product January. It's 10 bits lower than the normal. Now the accretion is taking baby steps, and we need to give some time to even the depositors to understand. Just looking it's lower than what is being offered requires a sense of sustainability in the minds of depositors. So it will take some time to create some good numbers. But we have offered this
Online product is going to be rolled out
so
soon. Online green deposit is going to be rolled out soon.
we need for this product. So numbers, I think we will have to wait for a quarter or so.
If at all I may add, interject and add, green deposit is more like an asset class, and particularly for a segment of the customer base who are more inclined to support such initiatives. So what we are also doing is that we are, as of now, we were not offering this facility through online, and very soon we will be in a position to offer it online also. So that is what it is. We are actually trying to address the aspirations of a particular segment of society who are inclined to support such initiatives. It is more because all this while there was no product available. So at least we have introduced the product with an intention that people who are inclined for this, they can come forward.
The next question is from Jimit Parmar of Money Control.
I wanted to get a sense on if you have made any provision on your investments to AIFs.
Yeah, AIF we were required to make provision after 14th of January, but nevertheless we have made an ad hoc provision of 240 crores already.
Okay. And second is a follow-up on your telecom portfolio. I wanted to understand, so in December of 2022, Vodafone reached out to you for loan, but you denied for some reasons as such. So wanted to understand.
I would prefer not to discuss deliberate a particular account.
Okay.
Yeah, I would really appreciate that.
Next up is Amol Devi from ETPF Kasa.
Hi, good afternoon, sir. Cross-selling and fees income has been growing for a lot of banks. You've been the largest because you also have a couple of subsidiaries there. I would like you to tell us the outlook specifically on the cross-selling. How much is that contributing to your business, cross-selling and the fees income? That is my one question. And secondly, sir, you have been saying that your unsecured loan book has been really robust. Are you still comfortable with the same statement, or are you going to?
I am absolutely comfortable with my earlier statement as far as our unsecured book is concerned. I will once again repeat that our unsecured loan book is even better than the secured. That is one. Secondly, your question relating to the cross-selling income and how much it constitutes. I think what I would like to give you a color, about 10% of the cross-selling income is now coming from YONO. Now it has reached about 240 odd crores, and 240 crores income really. Yeah. And also when it comes to, we are actually seeing a growth of almost about cross-selling income is going at about 10% plus. So when it comes to, if we look at our total income, then perhaps it may not constitute a very big portion. But the way we look at cross-sell is that our effort is to offer all the products under one roof. So from that point of view, we are in a much better position because we have got the products where we are sure about the quality, they are more credible, and they ensure that it should live up to the standards of State Bank name, which is known for trust.
Sure. Sorry, sir, you partly answered the previous question, but since it's a very big story in the market, by any chance, if given an opportunity for you to take a stake in ATM, will you go ahead or will you?
Stake, I will not like to comment because we will have to look at, because before taking stake, we need to look into the balance sheets. We need to look at the governance.
RBI.
But nevertheless, we are quite open in terms of coming to the support of the community, merchant community, and we will be more than happy to provide them the POS machines, codes, so that there should not be any disruption which they should face in their day-to-day activity. Thank you.
We request you all to stick to the questions related to bank results. Next up is Tanya from India Today.
Good afternoon, sir. So you mentioned that the loan growth is around 14 to 15% at this point in time. But correct me if I'm wrong, SBI has slowed your unsecured retail loans so as to focus on healthy growth. So how do you plan to sustain this kind of loan growth of 15% going forward?
I think the way we are growing in the unsecured, we should be in a position to continue to grow at that pace because there is enough opportunity for us to grow in that segment. And as I mentioned that 94% of our unsecured credit is to those who are maintaining their salary accounts with us. We have got a very clear visibility of the cash flows in terms of the salaries which they are getting, and we can easily lend. And I think That is something which will continue. That's not a challenge at all. And similarly, mortgage book also, we are seeing a decent traction, and now we are actually crossed 7 trillion mark in the mortgage book, and we are at about 26% of the market. So there also we are seeing decent traction. We will continue to grow in these verticals.
Also, sir, how is the interest rate scenario likely to play out going forward according to you?
The general expectation is maybe towards the third quarter we might get to see some kind of softening of the interest rate because the inflation has already come around in the range of 5%. But as we read the RBI statements, it's very clear that unless and until it comes in within 4%, we may not have any visibility of the interest rate cut. But the way this trajectory is, the way supply chain are now balanced, we are hopeful that towards the third quarter of this financial year, of the next financial year, we should get to see the interest rate cut.
Thank you, Tanya. Next up is Siddhi from Reuters.
Hi, so my first question is on deposit growth. If you could give some outlook on that, and how much of deposit repricing is left? Have we seen the peak of deposit rates right now?
I think as far as the deposit repricing is concerned, it is all taken care of. There should not be any more challenges. And as far as outlook is concerned, see, I would say that outlook will depend much upon how the economy grows. If at all it grows at 7.3%, then hopefully we should have decent opportunity. But yes, of course, I mean, as I mentioned, that normally in the inflationary conditions, there is a tendency on the part of depositors to move towards asset classes which offer better yields. So that is also a function of how the other players in the economy will offer the yield. So that is how it will work.
So my second question is on Paytm. Would you be open to house nodal account of Paytm?
Sorry?
Would you be open to house the nodal account of Paytm if the founder approaches you,
Account is already there.
Settlement account is there.
Settlement account is there with us. So that's okay. So long as we don't get any instruction from RBI on that account, we have no challenge.
Thank you, Siddhi. Next up is Piyush Shukla from the Financial Express.
So YONO, when is it coming? 2.0?
YONO 2.0, we are working on it, and it will not be a one go. We will have incremental improvements which will be seen, and the minimum viable product, I think we are expecting another July.
So secondly, AT1 you raised on 5,000 CR 8.0, but the rate is pretty higher as compared to earlier times.
It is actually much lower as compared to when we had raised the last one.
Okay, but still.
But also it is also, see, index of the spread. So in terms of spread, it has come down. So it is cheaper as compared to whatever we have redeemed. It is cheaper by about 1.5%.
Sure. Why I'm asking is that because there are some talks about linking, the methodology changes, valuation of methodology, linking it to the call. So, any discussions on that front?
My information is what people like you are publishing in the newspaper.
Yes, but sir, standard question. Any state?
Not yet.
Standard question.
Thank you, Piyush. Next is
Joel Rebello
from the
I wanted a clarification, Professor. You mentioned a number 12,718 crores. This is the wage revision done for this quarter.
No, 12,718 crores is for the 9 months of the current financial year.
Okay. My other question is, you said 240 crores AIF provision this time. Is there more to do for the next one?
See, we will see how the things really pan out, and depending upon that, we will be taking the call.
Have you made any calculations?
We are in the process, and also it should be around 1,000 odd crores.
You mentioned about the growth opportunities, everything is covered. Any challenges you foresee, because you started your address by telling us about the geopolitical concerns, monetary tightening, which could probably prolong. Any challenges in domestically?
I think as far as Indian economy is concerned, it is quite internally focused economy. Not that we are decoupled from the globe, but nevertheless, being an economy which is more internally focused, I think we do have some issues, but it should not be formidable challenges.
Anything that could trigger to issue?
No, see, the point is that we have got a dependence on the crude, but so far as the crude is concerned, it is not affected by the Red Sea issues. And there is a very, I mean, the only thing is that internationally, at times, the contagion effect is seen. So that is the only worry. Other than that, everything is fine. I would say that the way Indian economy is placed today, perhaps it is one of the strongest economy across the globe. And that should make all of us proud.
Thank you, Joel. The next question is from Abhijit Lele from Business Standard.
Good afternoon, sir. One is about RBI had revised the risk weights for the exposure to the unsecured credit as well as the NBFCs. So in terms of basis points, what is the real impact on that? This is independent of the quality. Quality you said that
It has gone up. I think risk weights have gone up. Maybe Saloni, if you can.
49 with CET.
70 bits and 49 bits. 70.
And 70 bits
For the CR.
79.
49 and 70.
49 and 70.
79.
There is on the, we have seen a sharp easing of the yields on the 10-year paper post the announcement. What really it means for your books, treasury books?
The normal course will have to wait and watch how it really looks like as on 31st of March. If it remains in the same trajectory, then perhaps it is to our advantage.
The next question is from Mayur Shetty from the Times of India.
Thank you. One question is on pensions. Is the bullet payment and when is what you need and how many beneficiaries will be there?
No, for the pension, actually, how much?
1,80,000 pensioners.
1,80,000 pensioners are there who will.
80,000 family pensioners.
This will be a bullet payment.
This is an actuarial assessment.
This is actuarial assessment for really adding to the corpus, not that it will all get paid.
This is a pension provision which is going to be added.
The difference is not going to be paid.
No. Straight away.
Over a period of time. You are creating a corpus based on actual.
They will be calculated for individually and then paid separately.
ATM you mentioned about the POS machine, but there is also an underlying merchant bank account which.
So we can open those accounts also. That's not a challenge.
Are you open to a one-time migration of all these?
Yeah, of course.
We are ready for that. If at all they are willing to come, we are more than happy to lap them up.
Thank you, Mayur. The next question is from Ali from ET Prime.
Yes, you get to the question on cost of deposits and whether the peak of deposit rates. Structurally, a lot of incrementally we have been seeing those who are in capital markets, be it SIPs and mutual funds or even direct investment in stocks. The conversations are more about the returns now. So do you think structurally it has changed and not just because of education?
See, I tell you one thing. This is a phenomenon which is invariably seen when the markets are on the upside.
Don't you agree that there is this?
No, but the point is, I'm only saying that mutual fund or securities are only an asset class. Likewise, bank deposit is also an asset class. So it is not a situation where people will move away from the bank deposit as an asset class. They will only go and invest into the mutual funds. They will keep part of the deposits with the banking system. Part they will keep with the asset classes like maybe securities, maybe debt or things like that. So it's more of an allocation principle which applies.
The question of Paytm is if reaching out to merchants, is it specifically Paytm merchants or merchants in general?
All. We are open for all the merchants. They can come to us.
This is the second last question. We'll take it from Hamsani from the Hindu Business Line.
Hi, sir. There is a slowdown in the rate at which gold loans have gone up, 13% for the quarter. And what I pick up generally from the industry, especially some of the PSU banks, is that they are rationalizing their gold loan portfolio a bit. They're trimming down exposure to gold loan in certain branches. What is the experience for you at SBI? Are you also doing something on this one?
No, we are not really doing anything like that, but we are only ensuring that we should offer a product which suits our risk appetite, and we don't offer the current account overdraft, we offer the term loans. Demand loans.
Your CET1 is at 9%. There is an asterisk to it which says it's 10 including Q3 profits. But even on that basis, it's one of the lowest in the recent years. You seem to be open to fundraising. Are you mulling any possibilities right now? Would you look at another equity raise possibly in FY25, given that your valuation of your stock is also doing very well now?
We'll wait and watch. As I mentioned, that we are quite open for all options, but if at all we will have clawback which is decent enough, which can support the growth of the balance sheet, we will ensure that we clawback.
How big would it be if you've done any estimates on that?
The clawback I expect should be somewhere in the range of 40,000 crore plus.
Thank you, Mamsini. We'll take the last question from Sangeeta Mehta from the Economic Times. Sangeeta, please go ahead.
Oh yeah, I could not see you. I said Sangeeta Mehta is very Sangeeta Mehta.
Sorry, my apologies. Sir, I wanted to ask you that if there's a good enough credit growth, are you looking at hiking deposit rates or would you look at selling the
We have got a situation where our credit deposit ratio was 66%. So I think as far as the credit growth is concerned, we are very well equipped to deal with the credit growth without disposing of any of our assets. We have enough liquidity, 130% liquidity coverage, which I believe is a fairly robust liquidity position for many standards.
So there won't be any deposit hike also?
We'll have to wait and watch depending upon the market.
And on Kasa, I mean, since there's been quite a bit of...
Because I have to keep in mind that I have to answer for the NIM next quarter also.
Yeah, but Kasa, would you be looking at raising your savings rate, I mean, interest on small ticket deposits?
We'll have to wait and watch. We'll deliberate on such subjects in the ALCO.
But you're open to it?
We are open for all kind of eventualities. Being a commercial banker, we cannot close any options.
Yeah. And so last thing, where is the credit growth you're expecting in the fourth quarter?
See, I expect the kind of trends which you have seen, I expect the credit growth to be as broad-based as we have seen in the third quarter.
No, I mean, could you just name a few sectors where you see the demand?
We are seeing decent growth in SME, agriculture, retail, and also corporate. As I mentioned, that we have got a pipeline which is as strong as about 4.5 trillion as far as the corporate book is concerned, and we have started seeing better utilization and much lower underutilization in terms of the term loan. So this is something which gives an impression that we can grow in all these areas. Sorry? Sorry? Any number on the credit growth? The way we have grown in this quarter, it should be more than that only.
Sir, I just want to clarify a number here. 240 crores you're saying is the cross-selling revenue from now, 10%, 270. Is that on an annualized or a quarterly run rate?
Annualized basis, our 2,700 odd crore was the income from the cross-selling. So 270 crore we have already done.
Thank you.
So you spoke about a clawback of 40,000 crore. That is the
Sorry?
capital. Clawback of 40,000 crore.
40,000 crore is the clawback of the profit.
For the year. The outlook that you are giving for quarter 4?
On given outlook is a function of the macro. So let us wait and watch how the macro is, and based upon that, I assure you that whatever are the opportunities, whatever fits into our risk appetite, we'll be more than happy to support those initiatives. Sorry? I had mentioned way back it should be somewhere in the range of 14 to 16%, and we are maintaining that.
Thank you all for joining us today. We have arranged some refreshment. Please have it. Thank you to the bank's top management for being with us here today. Have a great day.
We have another one.
Yeah, sure. ये तो फिर वाइवा होगा.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today. Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation and business brilliance. Subscribe now.